Good evening, everyone. Just taking a minute to make sure everyone join on the lesson, and hopefully we start our lesson very soon. All right, so I hope everyone joined on the lesson, and today we're going to do our revision lesson, as I said last week. Today we'll do an exercise question. So I'm gonna pick like one exam types question, and we'll try to solve it together. So basically, we'll have a full exam question where we're going to practice from the very beginning till end. So we're going to see how many questions we're expecting in the exam and how many marks will be from which chapter and what type of question normally come in the exam and how actually we can answer all of this. So today's lesson will be mainly exercise based and to focus on the exam. So once you practice this question paper, hopefully we'll be able to identify what type of question we'll be expecting in the exam and how could we approach to answer all this question. There is another thing, as I said before, like the time management is very important. When we do the exam in the exam hall, there is few things we have to consider. The first thing is like, can we finish the exam within the time duration? So that's very important. Like if you do the exam, you should be careful all of the time. So you always have on your exam, you'll look at like how quickly you can finish this exam, and it depends like how quickly you can finish your your task. And of course, like every task will not be same. Some tasks will be a little bit bigger, and obviously this task will give you more marks. So for example, task number one, that is normally come from the non-current asset, and this task can give you 21 marks. So obviously it depends how many marks you have for which question. So if the question is a little bit bigger, and if you see there is a more marks involved with that, then you can spend some more time. Obviously, like if the question is small, you can take less time for that. But more you practice, you will be make yourself more comfortable with the exam, and that will help you to understand the exam format, and of course like your time management. So within your allocated time, how can you complete the exam? So let's talk about our revision. So we're going to do one practice question today. That will be your advanced bookkeeping, and that is sample assessment one. So one of the sample we're going to pick that is given by AAT. So this question is recommended from the AAT. If we practice this question, we will understand the pattern of the question that we're expecting in the exam. So let's have a look at our tasks. So start with task number one. In task number one, we can see we have 21 marks, and this question is from the non-current asset. So the question is saying here, this task is about non-current asset. This task is about non-current asset, and of course, like non-current asset is one of the big area from this advanced bookkeeping paper, and especially the non-current asset register. So from this chapter, we're going to see how we record if we buy non-current asset. So you already seen this on our chapters when you revise the books. And obviously, like we have seen, if I buy some asset, I have to record on the non-current register. I have to calculate the depreciation, and I have to find the net book value, and I have to see how much is the carrying value, and how do I purchase that. For example, if I buy a machinery, I have to see what is the depreciation policy for that. When did I buy that? That means the acquisition date, and obviously how much I paid for that, for how long, and how we calculate the depreciation. What is the method of depreciation? Is it a straight line? Is it a reducing balance? Which method I'm going to follow when we calculate the depreciation? And after that, we need to also see what type of funding method we have. Like sometimes we paid in cash, sometimes we paid from the bank, sometimes we paid through hire, lease, sometimes it is loan. So this is very important to understand how did you buy that. So that's combined procedure will be for the non-current asset. And another consideration that we have to remember, that's for the cost. When we when you buy a non-current asset, not every single cost we can add as a part of the cost. For example, if any non-essential or any separated item that cost belongs to the item, for example, if I buy a machinery and if I take a insurance for that and if I take a maintenance service for that, that cannot be part of the cost. Remember that the cost will be definitely is has to be the part of the non-current asset. For example, if I buy a computer, so the keyboard, the mouse, the screen, that's all can be the part of the computer, the software. But if I take a insurance for that and if I take a maintenance service that, it cannot be the part of the cost. So obviously in the exam you might see some cost that may be not relevant to the cost. So in this case you have to skip that type of cost. All right, so let's read this question and try to see what we have here. So this task is about the non-current asset. You are working on the accounting record of a business known as AMBR Trading. You may ignore the VAT for this task. The following is an extract from a purchase invoice received by AMBR Trading relating to new equipment for its commercial kitchen. So basically, we just received the invoice, one of the supplier, Amber Trading, and we want to record it on our non-current asset register. So let's have a look at this one, what we have here. So two, and this is the invoice date. This is very basic thing. All this information we have in the invoice anyway. So we have electric combi steam oven. So we buy an oven, and this is the detail. This is maybe the serial number or maybe the item number, and the cost we have here, that is 5,565. So this is the oven cost. The next thing we're going to see, color touch control display for the same machine. You can see the same model or the same machinery. That means for the same machine, I have paid some money for color touch control display. So obviously we can see we paid separately for each part. And obviously each part we need to understand, is it a part of a machine or not? If something is not part of the machine, we cannot consider this one as a part of the cost. So color touch control display, this is also definitely the part of the machine. Then we have floor stand. Obviously, without the floor stand, we cannot run the machine. So that will be also our part of the machine. So I said this is also part of the machine. The next thing we can see here is electric portable pasta boiler. There is another machine we have buy. So electric portable pasta boiler, and the cost is 245. This is something different. So the first one, we have all of these for one machine. And the next one is a different model, something different machine. So we can see the cost is 245. So this basically we got this information from the invoice we received from Amber Trading. The next information we have here, the acquisition date has made under a finance lease agreement. Very, very important. So that means we buy this machine under the finance lease agreement. So we need to know what was the funding method. So now we can tell the funding method was finance lease agreement. So it's a lease purchase. The following information relates to the sale of some computer equipment no longer used by the business. So here I'm selling some computer equipments that business no need anymore. So the business said we don't need this asset anymore, so let's sell it. So if I sell it, of course I need to know how much I sold it for and how do we sell it. So you can see here item description. So we sold a computer. The model is desktop DT-C3. Then we need to know when did we sell it. So date of sale, 31st of December 2006. And the selling price is 180 pounds. So this is another information we have. Let's move on. Let's find it out what else we have. So from here, I can see we have some more information that is about the policy of the organization. So we can see here it says Amber Trading has a policy of capitalize over 500. So if I buy something, if I buy a non-current asset, and if the cost is more than 500, only that case I can capitalize it. So if something is less than 500, I'm not going to capitalize it. So for example, even if I buy something and the cost is less than 500, I'm not going to record this one as a non-current asset on my non-current asset register. So I'm not going to record if it is less than 500 pounds. This is the company policy. Kitchen equipment depreciated 20% per annum using the dimension balance basis. So the kitchen equipment, if anything I buy for the kitchen, like for example the oven or cooker or anything I buy for the kitchen, that will be depreciated using the dimension balance basis. So you already know what is it. That is 20%. The next point we have here, computer equipment is depreciated over 4 years. Okay, so that's very straightforward. So computer equipment, anything I buy, if that is computer, I'm going to depreciate it over 4 years on a straight line basis, assuming there is no residual value. So if I buy any computer and if I want to depreciate it, I'm gonna use straight line depreciation over 4 years. And just thinking there will be no residual value. So all I need to do, I need to divide the cost with 4 years. So if the cost is 10,000, I said 10,000 divide 4 years. So 2,500 will be maybe per year depreciation. Depreciation is calculated on an annual basis. So we calculate the depreciation year by year and charged in equal installments for each full month an asset on its life. So that means if I sell a asset middle of the year, I have to calculate the depreciation for 6 months. For example, if I use a machine for 9 months and if I sell it, then I have to calculate the depreciation only for 9 months, not for the whole year. Because I calculate the depreciation each full month. So I have to identify. So for example, this asset I'm selling here, this computer for 180 pounds, if I use it for a certain period, I have to calculate the depreciation up to a certain period, not for the whole year. All right, so let's see what else information we have. So we can see here, more information have here that is for the year ended 31st March. So this is our year ending date, 31st of March 2007. Record the following in the extract from the non-current asset register below. Any acquisition of non-current assets. So if I buy any asset, acquisition means purchase. Acquisition means purchase. If I buy any non-current asset, I'm going to record here. Any disposal. Disposal means sell. Disposal means sell. So if I sell any asset, I have to record on the non-current asset register. And the depreciation. If there any depreciation is charged, we also have to record on our non-current asset register. Not every sale will accrue an entry. Okay, so maybe like you don't have to use every single box we have for accrued entry. Show your numerical answer to two decimal place. So obviously, for example, it is 10.25. So after the point, you take only two decimal. Use the date, month, and year format for any dates. This one is not very important because you really don't have to type. So on the exam, you have to pick from the calendar, so it will be done automatically. So it's not something you have to type yourself, but still they say date, month, and year. Use the drop-down list below to select your answer where indicated. Otherwise, enter the amount or date into the relevant cell. So if you find from the drop-down list, pick from there. Otherwise, just type yourself. All right, so let's move on to our Excel question now. This is the non-current asset register. We can see it here. So on this question, I can see here we have a kitchen equipment. All right, then we have this kitchen equipment. You can see this is the cost, and this is the depreciation, and this is the carrying amount, and this one is purchased through part exchange. Then we have a computer equipment. That is the cost is here. You know the depreciation will be straight line over 4 years. This is the depreciation. This is the carrying value, and buy it to hire purchase. Okay, so this is already in the question. Is already done previously. So we have something here as well. On the bottom, we have this computer is sold, isn't it? Desktop DTC3. You can see the depreciation here. We have to calculate one more depreciation here and the carrying amount. And after that, maybe we'll sell it. So obviously, we need to record the disposal date and the disposal proceed, how much is sold. All right, so that's not very difficult question. All you need to do, we need to fill the boxes, but we need some information to do that. So let's go back to the question. First, we need to identify how much will be the cost for the new oven we're purchasing. So you can see here, let's write it down, oven. So oven, let's write the model number is CS081. And we are saying the cost we have this one, we will take that 5565 plus we have this one, the touch console display, have to take this one as well, 999, and we'll take the floor stand because this is also part of the oven. So 244. Now the other thing we can see here is electric portable pasta boiler. The cost is 245. You see that 245. The company said it is a company policy. Expenditure has to be over 500. Otherwise, we're not going to capitalize it. If the cost is less than 500, we are not going to capitalize it. It has to be more than 500. This one I'm going to ignore because I don't have to consider that because the cost is less than 500. It's only 245. So if I added these three, that will give me the cost. That will give me the cost for oven. So that is 6788. Thank you, Azia. You usually don't have to show the workings for that, Raju, because in the exam you have a very set format. You cannot go beyond that. There is no option you can see the workings. So obviously, like if there are any workings you need to do, there will be a white paper. So in front of you, you can do all these workings, and obviously, like you cannot show the workings on the actual question. Everyone, please make sure you have your microphone mute, otherwise it will. Right. So you will don't have any option for the workings. So all you need to do, you need to follow the template. All right, so this is number one. We have a cost. This is the cost we can found now. The next information we have here, the next information we need from here, that is our depreciation policy. So let's quickly record the depreciation policy here. We said the kitchen equipment, kitchen is 20% on dimension value, and we have the computer equipment for the PC, it is 4 years straight line. I'm writing all of this because if I scroll down, if I go to the bottom, I cannot see up. So just we need some information. As I'm recording all of this in the corner so that I can still see it. So the next thing we have here, the selling of this computer, that is disposal. And the disposal is a desktop DTC. ATC3, and the disposal date is 31st of December 2006, and the selling price, the disposal price is 180. So I think all this information we need so far, and if we need something, we'll come back. After I said, can you use a white paper for the note in the exam? Of course you can. So during an exam, you should tell, or you should ask your invigilator, can I have the scrap paper? They'll give you the white paper. You can do all the work inside. All right, so let's move on. Let's do the question number 1. So first we have this kitchen equipment. And kitchen equipment, we know the depreciation is 20% on dimension value, so there is no problem for that. So we have here for the depreciation, you can see the carrying value here is 1276.80. So we need to find the depreciation for this year and the carrying value. So can we do that? So we have a carrying value 1276.80 times 20%. So if we do that, on carrying value 1276.80 times 20%, that will give you a depreciation that is 255.36. Say the depreciation here is 255.36. And how much will be the carrying value? So depreciation minus the last carrying value, so that will give me the carrying value. So if I minus the depreciation from the carrying value, that will give me the new carrying value. That will be 1021.44. Well done, very well done, Fred. Yes, so we have the carrying value. Very well done, Evelyn. Yes, you have the right figure. So this is the first thing we've done, number 1. Number 2, you can see here, we have a sign here, drop-down sign. So this drop-down sign, basically, if we click here, there'll be a lot of options will come out. And that basically what we purchased, acquisition. Remember the oven we have purchased? This is the one we have to record here. To say electric oven, we're going to say electric oven, and we can write the number as well, CS031. You don't have to write really in the exam. All you need to do, you need to click and you need to choose that one. And after that, all you need to do the acquisition date. So acquisition date will tell us when did we buy that. So acquisition date, it was 1st of April 2006. So 1st of April 2006. And the next step is cost. How much you're going to take? The cost, you already calculate the cost here. The cost will be 6788. 6788. And this is the first year I'm buying, so we just recording the cost. The depreciation will be on the year end. Remember that the depreciation will be on the year end, not here. So on the funding method, how I'm going to purchase, or how did I purchase that, I'm going to record that. So here I can see this oven we have purchased through the finance lease, isn't it? So if we click here, the option will come lease, finance lease. So you need to choose from here. So I'm going to say finance lease. Finance lease was the option to buy this steam oven. Now for the year end, I have to do the depreciation, and for the kitchen, we know it's 20% on dimension value. The cost is 6788. So on 6788, it will be 788 times 20%. 788 times 20%. That will give you depreciation. So obviously, the depreciation we need to report here. So how much is the depreciation? 760. Well done, Nazia. Yes. Then how much will be the carrying value? So my depreciation is 1357.60 and the cost is 6788. The difference will come as the carrying value. That will be our 545420. Very well done. All right. Freddy, you have a question. When you calculated the cost, what is 244? Oh, the 244. So basically, if you go up, I'll show you. So if you're going up, we can see here. So we have this machine have three parts. You see, this is the same machine. This machine have three parts. So this is for the floor stand, this is for the display, and this is for the steam oven. So all of this the part of the oven. We have to add all of these to find the total cost for the machine. Oh, did I say 224? Oh, sorry about it. It should be 224. It's not 244. Thank you, Jordan. So it should be 244. Let's do that then. It's 224, not 224. All right. Yes, Fred. That was a writing mistake. I think it should be. All right. So now we have up to here the carrying amount. Then we move to our computer equipment. On the computer equipment, we didn't buy really anything for the computer, but we sold one computer. So we'll see later on that. For the first time, we'll see. For the first thing, we'll see what we have here. So on the computer equipment, we have year ending, we have this, we have that. Now we need to see what we have for the depreciation. So we need to go down to see what else we have. All right, so here for the year end 31st of March 2007, how much will be the depreciation charge here? And the carrying value. So let's have a look at that. So this one, they said the depreciation will be computer equipment over 4 years anyway. So it's going to be same every year. It was 345. I'm expecting it's going to be again 345. All right. Then the next thing we have here, desktop DTC3. This is the computer basically we have sold. This is the computer we have disposal. So let's have a look at that. We buy it through the cash. So we have acquisition date and the cost. This is my depreciation, that's my carrying value, depreciation, carrying value. Now all you need to see, when did we sold it? If you remember the date of disposal, that was 31st of December 2006. And our year is ending 31st of March. That means we use this computer for 9 months, not for the whole year, because year is ending 31st of March and we use up to 31st of December. So from this to there, we need to identify how much is the depreciation. So can you find the depreciation for the whole year and identify how much for the 9 months? So total cost, we can see here 579. So 579.84 divided by 4, that will give you the depreciation for 1 year. Divided by 12 times by 9, that will give you the depreciation for 9 months. So you need to say 579.84 divide 4, that will give you the depreciation for 1 year. Divide 4, that is 184.96. This is for 1 year. And the last year, we didn't use the computer for the whole year, so we have to identify how many months we have used. So you can see we use up to December because we sold in December. So April, 1st April to December, 31st December is 9 months. We need to calculate the depreciation for 9 months. So how we do that? So divide by 12 times by 9, that will give us how much? 10872. 102.108.72. So we're going to write here 108.72. And we're not going to write any carrying value here because we already know this asset is sold. This asset is sold, so we're not going to write any carrying value for that. Rather writing the carrying value, I'll come here on the disposal proceed, because I will say we sold it for £180 and sold on 31st of December 2006. So don't write anything. You can make 0, but don't write anything on the carrying value. Remember that if we sold the asset, the carrying value is gone. If the asset is gone, the carrying value has to be gone as well. We cannot keep the value on the financial statement or on the non-current asset register if you sold the asset. All right, so this is it for our discussion. So let's have a look. Just quickly look 1 minute and let me know if you have any questions from here. We don't calculate the profit or loss here until the question asks. So up to here, this is a non-current register. So non-current register is only about what I'm going to record on the NCA. It's not like I'm making a profit or loss. So in this question, we are not really considering. But if the question said, are you considering? So obviously I can say we are making a loss while we're making a profit. But you really don't have to think about it. All right, so let's move on. Let's move on to our next question we have. All right, so let's try the activity 1, question number B. In this question is asking, complete the following sentence. It is important to obtain prior authority for capital expenditure. It is important to obtain prior authority for capital expenditure in order for what? And the bank manager, the appropriate person to give this authority. So you have to answer. You have to select the answer from here. The first thing is like it is important to obtain the prior authority for the capital expenditure in order to what? Achieve appropriate level of materiality, to comply with the international financial reporting standard, or to ensure that the business as a whole will benefit from the purchase. So why it is important to take the permission or take the prior authority before I buy something like fixed asset, like a car, like a land and building, like buy something, a big thing, why it is important to take the authority from the higher uh, department. So basically, we can understand from this question, the suitable answer here is to ensure that business as a whole will benefit from the purchase. So the whole company will be benefited from this purchase. This is the reason, like you have to get the permission from the higher authority in order to buy something that will be a capital expenditure. The next point we have here, the bank manager. The bank manager would or would not be the appropriate person to give the authority. Do you think the bank manager can approve, like, buy this capital expenditure or don't buy this? So the bank manager would not be the appropriate, would not be the appropriate person to give the authority. So here it will be the third one. And here, not the bank manager, because bank manager don't have any idea about your company, so he will not be the right person to give you advice like buy this asset or not. All right, so let's move on to the next. Yes, there might be internal authority as well. So let's move to our task number 2. That's for the 17 marks we have here. So let's read this question, what we have here. This task is about ledger accounting for non-current assets. You are working on the accounting record of a business for the year ended 31st March 2007. VAT can be ignored, okay? A new vehicle has been acquired, so we buy a new vehicle, new car, so vehicle means car, so we buy a new vehicle, and it is estimated it would be used for 4 years. So we can understand like the depreciation will be for 4 years anyway. The cost is 12,488. So cost for the vehicle is the cost actually paid to buy the vehicle. That is paid from the bank. Okay. The business plan, to sell the vehicle after 4 years, when its residual value is expected to be 4,000. So we understand that how to calculate the depreciation, isn't it? Cost minus residual value divided by number of useful life, isn't it? So that's how we calculate the depreciation. Vehicles are depreciated on a straight line basis, so that's the good news for us. So we can straight away calculate the depreciation. A full year depreciation is applied in the year of acquisition. A full year depreciation is applied in the year of acquisition. That means if I buy even on the middle of the year, still for the first year, I'm going to charge the full year depreciation. So even though I buy middle of the year, still I'm going to charge the depreciation for the full year. So this is the question is saying, like when you buy the asset, a full year depreciation is applied in the year of acquisition. So the year I have buy it, I'm going to charge full year depreciation. Doesn't matter how many months I have used. Depreciation has already been entered into the accounting record for this existing vehicles. So that means we have some more vehicles, we have some more cars. So obviously for that, we already included the depreciation. So that means some of the depreciations is already included on the system. So let's have a look what's the requirement here. So the first one we can see, they're asking here, calculate the depreciation charge for the year on the new vehicle. So depreciation charge for the year on the new vehicle. So new vehicle cost was 12,448 and the residual value 4,000. And how much will be the depreciation? I think that's really straightforward. So the cost is 12,448. So let's do that. Cost is 12,000 minus the residual value, that is 4,000, divide the number of years is 4 years. So that will be 2112. All right, better. So 2112 will take 2112. This is the depreciation for the year. All right, the next job we have to include all this information on our general ledger. So let's have a look. Of course, the question said some of the information is already there, so we need to see what is there. You have your information, you have a vehicle at cost, and you have a depreciation charge, and you have an accumulated depreciation. So we already know this thing, how to do it. So let's have a look at the first one. Vehicle at cost. So we have purchased one vehicle, the cost is 12,448. So what is the journal for that? We always said if you buy something from the bank, they said you paid the money from the bank. So obviously bank will be credit. Now if you buy something, let the money is going from the bank. So if you buy something from the bank, so bank will go down. So bank will be debit and vehicle cost will be debit, bank will be credit. So that will be 12,448, 12,448. This is the journal. So the record, so vehicle is a debit. So on the debit side, I'm going to write bank, and that will be 12,448. So the journal is very important. If you know the journal, and obviously like we can record it straight away. And if you are very good on the ledger account, you don't have to do the debit and credit. You can do it straight away. But if you're a little bit confused, you can always do the journal. So vehicle at cost debit and bank is credit. So we are doing the vehicle at cost account. So on the debit side, we're going to write the bank. So that's it. This is the only asset we have buy. So if you added these two, and that will give me the total cost or total value we have for the non-current asset. If we added this to 46,300 plus 12,000 for 124,048. So that will be 58,000. 58,748. We're gonna write the same thing, 58,748. And of course, this is our balance sheet. So this one will move to statement of financial position as 748, 58, 748. All right, remember one thing, everyone, please. Recollect cost is item for SOFP, statement of financial position. So if anything that is relevant to SOFP, that means anything will go to the balance sheet, that one will always have a balance CD. That one will always have a balance CD. But if something is relevant to the SPL account, like depreciation, like SPL, this one will never have balance CDBD. Remember that. This one will have no balance CD or BD. Remember that if anything that is relevant, if it's anything relevant to your income statement, then you do not calculate the balance CDBD. If something is relevant to statement of financial position, only that time you calculate and find the balance CDBD, because anything that is relevant to the balance sheet or a statement of financial position, that will move forward 1 year to another year. But anything that is relevant to the profit and loss account, that's for only for the 1 year. Because profit and loss account, we do not take the balance from the profit and loss account for the next year. So 1 year we make the profit and loss account and it is vanished, done. So next year we're going to prepare another profit and loss account, like a fresh one. So obviously, if anything that is belongs to SPL account, we do not make the balance CDBT. Rather, we say it goes to profit and loss. All right, the next one we have here, depreciation charge. So depreciation is a debit. So of course, the debit side, I'm going to write the accumulated depreciation. So how much is the depreciation we have? So I'm going to write ACC depreciation. That is 2112. So this is the depreciation for the new machine, new vehicle for this current year. So my total depreciation will be now how much? 9687. This will be my total depreciation. And remember, this one will have no balance CD and BD. All of this depreciation 9687 we're going to charge to profit and loss account. We're going to say P&L account. So all this depreciation 9687 we're going to charge to profit and loss account. This one will have a no balance CD and BD. Remember that, because this item relevant to profit and loss account. All right, so let's move to the next one. The next one we have, that is accumulated depreciation. Accumulated depreciation is always credit. So on the credit side, I'm going to write the depreciation charge. Depreciation charge, and that will be 2112. How much will be the total if we added these two? 15,150 you already have the depreciation, and this year it will be added by 2112. So 15,150 plus 2112, that gives us 17,262. 17,262, and this one will definitely have a balance CD and BD, because the accumulated depreciation is relevant to SOF, statement of financial position. We're going to say balance CD 17,262, and is the total 17,262. That's it. So that's how we can do our measures from the information we have on the question. All right, so it's not that difficult anyway. So let's move on to our next question. What we have here. Let's read this one. Number B. Number B is asking, the business sold an item. The business sold an item of office equipment which originally cost is 1,800. The original cost is 1,800 pound. Okay. And the proceed means the disposal, sales is 600 were paid into the bank. Sold it for 600 pounds. So my purchase cost, the purchase cost was 1,800 pounds, and I sold it for 600 pounds. All right, so let's have a look how we record it. The first question here is asking, insert the account names to the debit and the credit column to show where the entries for the proceed will be made. Remember, if I make a disposal, the disposal will be everywhere. The disposal will be everywhere. For example, if I dispose a non-current asset, so either disposal will be debit or either disposal will be credit, but disposal will be always there because this account belongs to disposal. So now we can see we sold it this asset and we got 600 pounds. So and this money came to the bank. So if the money come to the bank, so we understand bank is debit 600. Why are we receiving the bank? Because the disposal is credit. We make the disposal and because of that we're receiving 600 pounds. We're going to say bank is debit and disposal is credit. But remember one thing, disposal will be always there. Disposal is always there when there is a disposal account. All right, so let's move to the next one. The next one we have here, number C. Number C is saying, show the journal entries required to remove the original cost of the equipment for the general ledger. The asset we have, 1800 pounds. Remember the cost. If I want to remove it because I sold it, it's not with me anymore. So how I'm going to remove it? Normally the non-current asset, the office equipment, that is debit. But if I want to remove it, I make it credit, isn't it? So office equipment, for example, the cost 1800, it was debit because it is asset. Now if I want to remove it, I make office equipment, I make credit 1800. So the debit and credit will be gone. And obviously, why I'm removing that? Because of the disposal. So I will say disposal amount 1800, that is debit, and we have office equipment at cost. So office equipment cost 1800, that is credit. So normally office equipment is our debit, but if I want to remove it, because this asset is no more with us, we need to make it credit. And why we making it credit? Because of the disposal. So disposal will be debit. All right, so let's move on to our next task. The next task we have task number 3. Let's have a look at that. That's for the 19-mark portion. This task is about ledger accounting, including the accruals and the prepayment, and applying ethical principle. Enter the figures given in the table below in an appropriate trial balance column. So all you need to say maybe is it debit or credit. All you need to say is it debit or credit because they are saying it is a trial balance column. Do not enter 0 in the unused cell. So if the cell is empty, do not enter the 0 because sometimes the computer, they don't understand it is 0 or not. Do not enter any figure as negative. So do not put any figure as a minus sign. So don't do that. All right, so let's try this one together. That's a very easy question. Trial balance. All you need to say is it a debit or credit. The first one we have accrued expenses. Accrued expenses. What is accrued expenses? It's a liability. I use the services. For example, I have used the electricity, but I didn't make the payment yet. So I have used the electricity for this month, but I didn't make the payment yet. So that's my liability because I have to pay the money and I use the services. If I use the services, that's my liability to make the payment for that. Obviously, if it is my liability, that will be my credit. Then we have carriage inwards. Carriage inward means it's a delivery cost. Sometimes the word is a little bit tricky, but carriage inwards means when we buy something, let's say if we buy something and we are the one who pay the delivery. So when the buyer pay the delivery cost, we called it carries inwards. When the buyer paid the delivery cost, we called it carries inwards. When the seller paid the delivery cost, we called it carries outwards. So both are expense, and expense is debit. Discount allowed, I think all of you know that. Discount allowed is expense for the business, so of course it is a debit. And we have the next one. The next one we have prepaid income. Prepaid income is a liability, so I'm taking the money in advance. For example, I said, I will give the services next month. Can you give me the money now? So I'm taking the money in advance. So if I take the money in advance and I'll give the service later on, so that's my responsibility. That's my liability because I already took the money. So I have to give the services. So if this is the case, then it become my liability to provide the services because I already took the money. So prepaid income is always liability. This is our. All right, so let's have a look at this one. The next one. The next one, it says, you are working on the accounting record for a business for the year ended 31st March 2007. Ignore the VAT. Okay, so we'll ignore the VAT. The questions say ignore the VAT, so we'll definitely do that. Here, the detail is say you are looking at vehicle running expense. Vehicle running expense is expense for the business. So here the question said the cash book for the year. The cash book for the year shows payment for vehicle running expense is 9468. So from the cash book, I have found I paid total £9,468 for the vehicle running expense. So my question here is all of this 9,468 is relevant to this year? That is 31st March 2007. If not, I have to minus some of the expense. Let's have a look what is the information we have. They said this includes the following payment for road fund license. Okay, road fund license for the period. It's a 1st January to 31st of January. So 31st of December. 1st January to 31st of December. That means this is for the 12 month, isn't it? And our year is ending 31st of March 2007. And we paid up to December. So we paid for the whole year, but only 3 months is relevant to this year, only 3 months. So from the figure 516, only 3 months is relevant to this year. The next amount, 405, that is completely paid in advance because this one is start from April. When our year is end, our year is end 31st of March. So I cannot claim any of this from this amount like at the expense. Because this 405 completely I paid in advance for the next year. So this is cannot be my expense for this year. And from here, only 3 months I can claim. Rest of this is a prepayment. So let's have a look. What is the question here? Let's find the requirement first, what they're asking. They're asking here, calculate the value of the adjustment required for the vehicle running expense as at 31st March 2007. So how much amount we have to adjust? Let's have a look how much amount we have to adjust. So we will say, so only 3 months is relevant, so 9 months is not relevant. So I'm going to say 516 divided 12 times 9 months is for the advance. So how much it is? So 516 divided 12 times 9, that will give us 387. This is prepayment. And also 405, this is completely prepayment. Plus 405. So how much is the total? 792. This 792 is all prepayment. And all of this we have to adjust because this expense I cannot claim in this year because this expense belongs to next year. So I'm going to write here 792. $92. If the question said anything about it, no. So that's all. So we have 792. This is our adjustment figure. Now this adjustment, obviously we have to minus the expense, so remember you need to put the minus sign before that. This one will reduce the expense for this year, so you have to put the minus. All right, so let's have a look. What is the next one? They said vehicle running cost. This is the ledger account. This one came from the last period. Prepaid expense reversal. So that means this one, last year, I show this one as a prepaid, but this one, this year is a reversal. For example, whatever is a prepayment for this year, for example, this 792 is a prepayment for this year, but not for the next year. For the next year, it will be absolutely fine. So for example, for current year, and the next year. So for the current year, I'm going to minus this 792. And for the next year, I'm going to add it 792. Because this is a prepayment for this year, but not for the next year, remember that. All right, so here we have a reversal. All right, there is no problem for that. And the question said we received how much? We paid how much from the bank? So we paid, our cash book said the payment for the vehicle running cost 9,468. So vehicle running cost is debit and bank is credit. So on the debit side, I'm going to write bank. That is 9,468. Well done. And we have some prepaid expense for this year, that is 792. So I'm going to say prepaid expense 792, because writing on the other side actually minusing from this side. So my running cost is not total this. If I added this to 9,468 plus 840, so 9,468 plus 840, that gives me 1,008. 1,000, 10,308, 10,308. Even though my total payment from the cash book, for example, that is 10,308, but this one is for the next year, so I have to record on the other side. So the balance CD will be, profit and loss account balance will be a little bit lower than that. Because all of this money inside of this 9,468, we have 792, we have 792 that belongs to the next period. So any prepaid expense will reduce our expense. Remember that. Any accrued expense, that will increase the expense, but if it is a prepaid expense, that will reduce the total expense. So my profit and loss account, I'm going to charge for the vehicle running cost how much? 10,308 minus 792. So on the profit and loss account, I'm going to charge 9,516. This is the expense I'm going to claim on the profit and loss account. So this comes from the last year. Maybe last year it was our prepaid, but this year is sorted because this is not a prepaid for this year. On the other hand, from the bank, I paid this amount, but inside of the bank, this amount, on the bank, we have some prepaid. So we're writing this on other side, so we have the balance. All right, so let's move on to the next question. Let's see what we have. Okay, so the next one is saying here, you are now looking at commission income for the year. Commission income, that's an income for us. Commission income is the income. Commission income 2070 was accrued on 31st of March 2006. So that means for this year ending 31st of March 2006, it was accrued. Accrued means I already earned it. For example, even I didn't receive the money, but the income has been earned. So income has been earned means we have to show this income on the financial statement. This is our income. This is our income, but I didn't receive the money. So for example, I already provide the services, but the customer didn't make the payment yet. So I would say that's my accrued income, is kind of your asset, because you already provide the services, but obviously the customer didn't make the payment until this month, 31st of March 2006, and they paid to you next year maybe. But for this year, you have to show this one income. So this year income, current year income will go up, and next year income will go down. Because even though you received the money next year, so from the bank you will see there is no money received this year, but you still have to show this one as income, accrued income. But next year you have to reduce this income because you already show this one this year. Okay, so let's read the question. Complete the following sentence. The reversal of this accrual is dated. Remember, the reversal date will be the very next day of the year ending. So your year ending is 31st of March 2006. So just next day, 1st of April 2006, on that day it will be the reversal. So up to 31st of March, this is your accrued income, but for the next year it is not. Because next year, this is the income for basically that will be not a reversal anymore. That will be not your accrued anymore because next year you're going to receive that money. So obviously, this commission income, even though it was accrued up to 31st of March, so you have to reverse it very next day. As soon as the year is end, very next day you have to reverse it. So you're going to say 1st of April, 1st April 2006. 1st April 2006, this will be our reversal date. Now the next question is, the reversal is on which side of the commission income account? Commission income account, is it on the debit side or it is on the credit side? Now obviously, uh, this is a little bit tricky question. So next year, my commission income has to go down, isn't it? Because this income I already show this year. So next year, I'm going to reduce the income. So I'm going to say commission income debit and the reversal accrued commission credit. So obviously, you can see the commission income is debit. So if I do the commission income account, this reversal will come which side? This commission income is debit. So on the debit side, I'm going to write reversal of commission income. So it will come to the debit side. Yeah, so remember for this year, as soon as this become reversal means I have to do the opposite. So for this year, I said commission income credit and accrued commission income debit. But next year, when I do the reversal, I do completely opposite. I need to reduce the income for the next year because this income I already showed to the previous year. All right, so let's move on to the next one. Here it says, the next point it says, the cash book for the year shows receipt for the commission income is 42,805. So the cash book is saying we received total 42,805 pounds on our cash book. Commission of 1960 for the month ended 31st of March 2007 was received into the bank 15 April. So there is some commission income that is relevant to 31st of March 2007, but we received on the bank account next month, 15th of April. Even though it doesn't matter if we received next month, but if the income is relevant to this period, I have to bring it back because the income is relevant to this period. Even though I receive it next month, it doesn't matter. We have to record for this period. So obviously we can say 42,000 we received on our cash book, already we received, and 1960 plus 1960 that we didn't receive, that is accrued, even we didn't receive it, still we have to show this one as a commission income. And 2070, remember that's basically was come from the last period. So this 2070 we already showed as accrued income last year. So this year I have to minus because 2070 inside of this 42. So 2070 inside of this 42,805 that I received after the year end. So I have to minus that 20 and 70. So how much figure we have? That is 42,695. Well done. So very well done, Zumpa. Yes, we have 42,670. All right, so this is the figure we need to show as a commission income for the year ended 31st of March 2007. All right, let's move on. So our next question, that's the ethical question we have. Let's read this question. This ethical question always come in the exam for a few marks, like 4 or 5 marks, and that's quite straightforward and easy. Your junior colleagues ask you why you are considering the receipt dated 15 April. So one of your colleagues is asking, listen, we received the money after the year end. Our year was ending 31st of March. We received the money 15th of April. So why we are considering this money for this year? So what is the reason? So she is confused as the financial year ended 31st of March. So she is telling like, our year is ending 31st of March and we received the money on 15th of April. So why you still need to record this one for this year? So which of the following can you use in your explanation to her? You must choose one answer for each row. So let's read this one, try to find out. So acceptable reason, non-acceptable reason. The first one, the proprietor. The proprietor means the owner. The owner of the business asks you to increase the profit for the year. That's why you record this. Is it acceptable reason or non-acceptable reason? So it cannot be an acceptable reason, isn't it? Because obviously, like if your owner asks you, you need to show some more profit and include all the income. It doesn't work like that. So it's not acceptable. The next one we have here, the transaction is an expense relevant to the period ended 31st of March. Is it expense? Not really. It's a commission income, isn't it? So that's not an acceptable reason. That was a commission income. So income is income. It's not expense. So we would say no, it's not acceptable reason. It's not an expense. It is basically an income. The last one is says the figure is the current asset as at 31st March 2007. So on that day, it was my current asset. So basically, I already provide the services, I already earn the income, but I didn't receive the money from the customer. So up to that date is my current asset because I didn't receive it. It's like a credit sale, exactly like a credit sale. When you make a credit sale, what happened? When you make a credit sale, we always what we do, we always tell the customer like you are my sales ledger control because you need to pay some money to me, so you are my sales ledger control. So if you are my sales ledger control, then you are my asset, exactly like here. So when I already earned the income and if I even didn't receive it, this is still my non-current asset. This is my current asset because I'm going to get some money from these people or from this customer. All right, what you're saying, let's try. You don't know how you get this. So all you need to do, I can show you once again. Let's move on. So all you need to do. So if you have a look, this question, it says the commission income. This one was accrued on last year, and this one is included here because that's come from the last year. It was a reversal. Last year it was accrued. So this year we received total 42,000. So 42,805 we received from our cash book. We can see we received for the commission 42,805. And this one, 1960, even I didn't receive it, but the commission was earned this year. Commission of 1960 for the month 31st March 2007 was received into the bank 15 April. Even though I received 15th April, but this commission is relevant to this year, so I have to record in this year, 1960. And 2070, that is inside of this figure, 2070 inside of this figure. This one was the income for the last year, but the customer paid after the year end. That's why the money is still there. I have to minus that. So if you do that, that will give you this figure, 42,675. All right. Yes, you have to, because this is the same question. So we have the same question still. Okay, so move to task number 4. We don't have many tasks here, so I think task 4 and 5, this is our last question. So I would say let's take a break, and after that, when we come back, we can start from task number 4. Because we already done 3, so we have 2 more. We can do it after the break. Let's take a break, and after that, when we come back, we'll start from task number 4. Right, and all of you can please write your name for the attendance. That will be good for your recorded lesson. All right, welcome back. So let's move on to our task number 4. And this task number 4 will give us 23 marks. So let's have a look how we do task number 4. And from this question, we have to see like how we do the adjustment. Mainly this question will have from the extended trial balance. So let's read this question first. So this task is about adjustment. So this task is all about the adjustment, and we know that adjustment means it's a year-ending adjustment. If you see any question they ask about the adjustment, you need to understand they're talking about the year-ending adjustment. Year-ending adjustment happen when the financial year is end by the business, but there is something we still need to adjust. For example, the depreciation, for example, the accruals, for example, the prepayments, this type of things, this type of stops, we have to adjust after the year end. So this thing always need to do by the organization. So once the financial is ended, they always check what adjustment they need to make, and they always do it like after the year end. So let's read this question. Here we have task number 4 for 23 marks. So let's read this question and try to solve this question together. You are a trainee accounting technician reporting to a managing partner in an accounting practice. You are working on the accounting records of a business client. A trial balance has been drawn up and balanced using a suspense account. So you already prepare a trial balance and has been drawn up and balanced using a suspense account. You now need to make some corrections. So we need to make some corrections and adjustment for the year end 31st March 2007. You may ignore the VAT for this task. The allowance for the doubtful debt need to be adjusted to 1% of the outstanding trade receivables. So outstanding trade receivables means sales ledger control. Outstanding trade receivables means sales ledger control. So normally we have to adjust to. There is two words here. One is adjusted to and one is adjusted by. Remember that if the question said adjusted to, that means they're asking up to this amount. For example, if I said adjusted to 100, that means the total has to be 100. If I said adjusted to 100, that means it has to be total 100. On the other hand, if the question said adjusted by 100, that means whatever we already have. Let's say, for example, we have already 20, so it will be now another 100, so it will be 120. So adjusted to means the total will be 100, adjusted by it will be increased by this amount. Now, the next point we have here is adjusted to 1%. Now, when you calculate the doubtful debt allowance, and obviously you have to calculate on the sales ledger control balance. So we have to know how much is the total outstanding balance from the sales ledger control, from the trade receivables, and from there we have to calculate how much is the allowance. Now, there is two things. There always some allowance in the financial statement because you already calculate some allowance from the previous year and that moved to the next year and next year. So for example, if we have already allowance 50 and the one person give us, let's say, 40. So we already have 50 and we wanted to keep 40. So 10 we have to reduce. 10 we have to reduce. Remember, if we need to reduce the 10, we have to do through the adjustment. So there is two things. One is doubtful debt allowance. One is doubtful debt allowance adjustment. There is two things. One is doubtful debt allowance. Another one is doubtful debt allowance adjustment. So allowance for the doubtful debt that is relevant to statement of financial position. On the other hand, allowance for doubtful debt adjustment that is relevant to statement of profit and loss account. So if I want to increase it, remember, if I want to increase it, I make it debit 10. If I want to decrease it, I want to make debit credit 10. So we'll see that anyway. So let's move on. What else we have? The next thing we have here, number B. On number B, they said record the adjustment into the extract from the extended trial balance below. Make the following further adjustment. You will not need to enter adjustment on every line. Do not enter zeros into unused cell. Okay, we're not going to enter zero if the cell is not used at all. So what is the correction we need to make? There is few correction we need to make. The first one we have here, purchase of 984. Purchase of 984 have been posted to the office expense account in error. So what happening here? There was something purchased that was 984, but mistakenly I put it on the office expense. So what I need to do now, I have to take away from the office expense and I have to include on the purchase expense. So normally office expense is debit, so office expense, it is debit. So if I want to take it out from there, I make office expense credit, that will be 984, and I need to increase the purchase expense. So I'll say purchase debit 984. So as soon as I make 984 debit, so it will be increased because purchase is always debit. If I make another debit, so it will be increased. On the other hand, office expense normally is a debit. If I want to reduce it, I'll make it credit. That's number one. On number two, I can see here they said a prepayment of 450 for airfare has been posted correctly on the credit side. So it's posted correctly on the credit side. There was no corresponding debit entry. So if I don't write anything for the debit, that means I created a suspense account. These costs are classified as sales expense. This cost classified as sales expense. So that means the prepayment I have 450. Prepayment I have 450. That was I didn't record it because prepayment is a debit. I missed the no debit entry recorded. So prepayment is supposed to be debit, and obviously the other side will be credit for the sales. Now I missed the prepayment, so I'm going to record that. So prepayment is debit. If I want to increase it, I'll make prepayment debit again. So I'll set prepayment debit 450. And I missed the other side, the correspondence entry. That means the suspense was created. So I'm going to say suspense is a credit 450, because we already know we never keep suspense on the financial statement. If there is a suspense, we have to remove it. So make the suspense credit. That means the suspense will go. Before we said like suspense is a debit and the sales is credit. Now I said prepayment is debit and suspense is credit. That means suspense, debit, and credit will cross each other. And the new entry, the prepayment 450 will be added on the system. Number 3, we have the planned as cost account in the general ledger correctly show a balance of 24,500. So on the general ledger, I have a correct balance. There is no mistake. This has been incorrectly transferred to the final balances as 25,400. So basically, the amount is 24,500, but mistakenly I transferred the balance 25,400. So the difference is 900. So this 900 on the planned at cost, I put extra. So I need to reduce it. So normally plant and cost is a debit. If I want to reduce it, I make it credit. So I would say suspense, that will be debit. Suspense debit 900, because when the differences come, suspense created automatically. If my debit side and the credit side doesn't match on the trial balance, suspense created automatically. So suspense is debit, and plant at cost credit 900. This is the story of our errors. So let's try to solve this question now. First, to the number A. Number A is asking calculate the value of adjustment required. So let's have a look how much is the value of the sales ledger control. So we can see here the value of the sales ledger control, that is 17,900. So 17,900 and 1% on that. How much it is? 179 should be 179. And 179, they said keep allowance. The question is saying keep allowance 179. So I want to check how much allowance you already kept. So allowance for doubtful debt, I can see I kept how much? 224. So the question is saying to us like keep 1%, that is 179, but we kept 225. So you already have 225. So we need to decrease it by how much? 225 minus 179, it is 46. All right, so 46 decrease. Now, if I want to decrease it, how I decrease that? So I have something here, allowance for doubtful debt. Remember that, allowance for doubtful debt. Normally, if on the adjustment section, if I want to increase it, I make it debit. If I want to decrease it, I make it credit. 46, I'm going to make credit here. And on that section, number A, I'm going to write 46 here. So number A here, I'm going to write 46. That's the adjustment we require. All right, so let's move on. Then now we're going to adjust all these journals. So allowance for doubtful debt, I want to reduce that 46. Every entry will have two impact. So as soon as I write 46 here, so 225 is our credit and 46 is a debit. So that will be minus automatically, because debit and my credit is like a plus and minus. So 225 is a credit and 46 is a debit. That means the remainder balance will be 179 automatically. On the other hand, allowance for doubtful debt adjustment, that will be reduced by 46, because the adjustment is always, we have to change every year based on the previous figure or based on the management estimate. Every year we have to change our allowance for doubtful debt, because sometimes it could go up, sometimes could go down. We have no idea. We have to always adjust it every year. Now our next job will be to adjust all these balances. Number one, the first one was we have to reduce the office expenses, that is 984. We have to increase the purchase. So let's do the office expenses. Where is the office expense? Here we have the office expense 116. Normally the office expense is debit. If I want to reduce it, I make it credit. So I'm going to say 984 credit on that adjustment. As soon as I make that adjustment, 984 credit, so debit and credit will be offset each other. and it will be reduced by 984. On the other hand, purchase, I want to increase it. So purchase is a debit. If I want to increase it, I make it debit again. So debit and debit will be plus and plus. So it will be added. So new purchase will be now the new figure. Number one is done. Number two, we have a prepayment. We have to increase the prepayment. So the prepayment, where is the prepayment? Prepayment we have, it is we have 450. This one we have to increase. So prepaid expenses we already have 505, and we want to increase it by 450. So we make another debit 450, and that will be automatically increased because debit and debit is like a plus and plus. And this 450 also will be reduced as a suspense. So suspense is credit. So we can see here on the credit side adjustment, we're going to write suspense 450. Number two is done. Then we move to number three. Number three is a suspense is debit 900. So on the debit side, I'm going to write 900 on the suspense account. And on the credit side, or planted cost. So look for where is the planted cost. Here is the planted cost. And on the credit side, I'm going to write 900 because I want to reduce the plant. So normally the plant at cost is a debit. If I want to reduce it, I'll make it credit. So as soon as I make it credit, it will be reduced by that amount. So you can see now suspense will be vanished because we have credit here 450. So if I minus this one from the debit, so there will be 450 balance. So debit and credit will be equal. So that will be no balance. It will be zero. Suspense has to be vanished. After the adjustment, after we make the correction, or after we made any type of adjustment, before we transfer all the information to financial statement, suspense account has to be vanished. We cannot keep the suspense account and submit to HMRC. Suspense account means something is wrong, is not right yet. So obviously we have to find it out the mistake, we correct it, and we submit to HMRC, not before that. All right, that's really straightforward. That's not too complex. So let's move on to our next workings here. The next one is saying the rent. It says show the journal entries that will be required to close off the rent account. So how much is the rent we have? Let's have a look. The 14,800. Rent we have 14,800. So what will be the journal for that? So remember, this rent here is 14,800 is a debit, but when I'm going to post it to the profit and loss account, they said close off. So this one will go to where? It will go to profit and loss account. So that time I'm going to make the rent credit. Remember that rent, I'm going to make credit 14,800 because this rent will be vanished from the financial statement, from the trial balance, and it will go to profit and loss account 14,800 debit. So that means from here, from the trial balance, I'm going to remove the rent because normally on the trial balance rent is a debit. So as soon as I make the rent credit, that will be vanished from here, and that will go to profit and loss account on the debit side. All right, so the narratives is very easy. All you need to say transfer the rent for the year end to profit and loss account, nothing else, because you're transferring all these expenses to the profit and loss account. So this one will be the narrative. Transfer the rent to the profit and loss account for the year end 31st of March 2007. All right, so let's read this one now. The next point we have here, it says your manager has now reviewed the resulting figure from the draft account. He is concerned that the client may have significantly understated the irrecoverable debt figure, and this will need further investigation. You know that the client is pressuring to get the final accounts completed for what she describes as an important meeting for the future of the business. Any further investigation will mean her deadline cannot be met. So one of the client, you found like there is some underestimation, there is some figure that is relatively low for the irrecoverable debt, and your manager said like your client said they have a deadline, so there is a meeting, and obviously the meeting will depend on the draft account. So obviously they're asking like to do it really quick. So what will be your decision there? This is the ethical question. The ethical question is kind of the judgmental answer. So you have to make the judgmental answer. What you think exactly? So let's have a look at this one. What should you and your manager do next, and why? If answer here, we have four options. We have to pick one. The first one is saying investigate the collectibility of the debt and delay completion of the accounts, as any adjustment could affect the outcome of the meeting. So they said like the first one is saying investigate the collectibility of the debt. So you try to investigate more and delay the completion. So don't do it like too hurry, don't do it too fast, because of any adjustment you make, maybe that will have a different decision on the meeting. So maybe because of your adjustment, maybe the decision of the meeting or the outcome of the meeting, the result of the meeting will be different. This is number one. Number two, it says investigate the collectibility of the debt and delay completion of the accounts because the client will have overstated the importance of the meeting. This one is kind of, we cannot say that the client will overstate the importance of the meeting. So we really cannot say that. Complete the accounts by the deadline without any further adjustment, as any changes is unlikely to be relevant to the meeting. So the next one is saying like obviously you don't have to worry about it, just submit and meet the deadline, because whatever the adjustment you make, that will not relevant to the meeting. That is not true, because if the financial statement is the part of the meeting, so anything I change, that will change the outcome of the meeting. Complete the accounts by the deadline without any further adjustment, because the client must keep the priority. So we said don't have to worry about the adjustment because you have to make your client happy. So just submit the account. You don't have to worry about any adjustment. So which one we think that the relevant steps will be for us for this ethical question. So based on this four, we can see obviously the first one is a really relevant, because obviously like we have to wait, we cannot just complete because of the deadline. We have to wait for that, and because of any adjustment that likely to be have a impact on the outcome of the meeting, so we need to make sure like any adjustment we make that is relevant to the meeting. All right, so let's move on to the next one. We have the next task. Task 5, we'll have 5 questions in the exam. So obviously like every question will contain roughly 20 marks, so average. So it's not too many questions, but you need to know this exam will be really quick. So it's not like there is a lot of question here, but the question can be tricky in the exam. Okay, so let's have a look. Task 5, 20 marks. This task is about period and routing using the accounting record and the extended trial balance. You are preparing the bank reconciliation for a sole trader. So we are preparing a bank reconciliation for a sole trader, and you already know what is bank reconciliation. The bank reconciliation is the difference between the cash book balance and the bank statement balance. For example, when my bank says something and when my cash book says something. For example, let's say I'm saying right now I have £5,000. Our bank said no, right now you have £7,000. So when my bank saying something and when my cash book says something, when the balance doesn't match, we have to reconcile it. And this is called bank reconciliation. You are preparing the bank reconciliation for a sole trader. The balance showing on the bank statement is a debit of 1930, and the balance on the cash book is a debit 2407. So basically, remember, any balance showing as a debit on the bank statement is a liability, is overdraft. Because if this is your money, for the bank it is a liability. What is asset for you is a liability for the bank. So if you have your own money, that is the liability for the bank. This is not the asset. So if bank said this is the debit, that means it is your overdraft. So you use more money than you have. So let's say you have £100 and you use 200. So 100 you using the bank money. It is not your money. So that's why bank said it's a debit. Because as soon as you see anything, the bank said debit, that means basically it is a liability for you. When you make a payment over the card, for example, bank always said uh, £10 or £20 will be debited from your account. So from the bank point of view, debit means is expense. From your point of view, debit means is asset. So on your cash book, debit means you have this money, this is your asset. If the bank said debit, it's like you using the overdraft. So it's not matching. So you have to identify the reason why. The bank statement has been compared to the cash book at 31st of March, and the following points are noted. Okay, what is the requirement? Use the following table to show three items that should appear on the cash book side of the reconciliation. Enter only one figure for each line. Do not enter zeros on the unused cell. So we're talking about cash books. We need to find something, three transaction, that is relevant to cash book, not bank statement. So that means we need to find something that it's on the bank statement but not on the cash book. Something on the bank statement but not on the cash book. So we'll find something like that. So we need to adjust all this item to our cash book. So let's read this question and to try to solve it together. So the first one we have here, remittance advice. It says a remittance advice from a customer has been received and an entry made in the cash book for the correct amount 734. This is not yet showing on the bank statement. Now the question is, do I have to do anything with the cash book? Answer is no, because the entry is already made on the cash book. So I don't have to do anything with my cash book because my cash book job is done. So I'm looking for something, three items that will go to the cash book. Number two, a check from a customer, a check from a customer for 367 for a debt outstanding at the year end was received in April. This is um, this is a check from a customer. So basically, I received the check. As soon as I received the check, I already updated my cash book. But I give it to the bank, and bank takes some time to clear the check because normally bank takes 3 days to clear the check. But my job is done. Once I receive the check, I already updated on my book, so I cannot do more than that. So obviously, it's not something I can do on my book because I received the check, I give it to the bank. So next job is for the bank to clear the money. So it's not something I can do. So this is not even relevant to the cash book. I cannot do anything to the cash book. Then we have the next one, number three. A faster payment of 2174 for the purchase of a non-current asset is showing on the bank statement but has not been entered in the accounting records. So that means I make a payment. I made a payment from the bank, the money is gone, 2174, but I didn't record it on our accounting records. Accounting records means the cash book. So this one is absolutely relevant. So this one I have to record on my book because if the money gone from the bank, so I have to record on my book. So on the cash book, which side I'm going to record if I make a payment? I made a payment from the bank, but I didn't record it on my book. So on cash book, which side I should record 2174? In cash book, we have a two side, isn't it? One is debit side, one is credit side. Debit side all about money received, and credit side all about payment. So we'll say we're going to record on the credit side. All right, let's move to the next one. So number four, the bank has made an error On the last day of the month, a payment of 1087 on the statement was duplicated. So bank made an error. Is there anything I can do? If the bank make an error on the bank statement, I cannot change my bank and I cannot change the cash book, because if something bank do error, that's not something I will make error on my book as well. If bank make error, bank will correct it anyway, but doesn't mean I have to make the error. So this is not relevant to us as well. So I'm not going to do anything if bank made a mistake. So bank balance will be changed, not my balance. Number 5, we have a direct debit payment 422 has been recorded in the account as 222. So there is a direct debit payment gone from the bank. The amount was 422. But on our cash book, I recorded 222. So that is relevant, isn't it? Because I supposed to record on my cash book 422, but I recorded 222. So I recorded less. So I have to record some more money on my cash book on the credit side, isn't it? How much is the difference? So 422 minus 222, the difference should be 200. And this 200 we should record as the credit side because it's a payment. Very good, Evelyn. Very good, Final. So yes. Then move to the next one. We have interest charge. Interest charge 142 has not been entered in the cash book. So we have a charge for the interest. Remember that interest charge and interest received is a two thing. Interest received means you received the interest from the bank. And interest charge means you took some loan, so you have to pay the interest. So interest charge is kind of the expense for you. So that adjustment you do is number 5. So that adjustment you do, that for 142, that will be your credit, because the interest payment money is going from your bank. And if this is the interest received, then you have to add on the cash book. But interest charge is the expense. All right, so all you need to do, you need to record all of this on our cash book, because they said what adjustment we need to make on the cash book. So we can do that. So let's move on and quickly do that. So we're going to record that. We'll say adjustment number 3. Adjustment number 3, we're going to say 2174 credit. Adjustment number 5, 200 credit. And adjustment number 6, 142 credit. That's it. All right, so let's move on to our next page. Okay, Umit, you said like the point number 2, you said a check from a customer 367 for a debt outstanding at the year end was received in April. Now we are talking about what? We are talking about the cash book that is relevant to cash book. Now, if anything is outstanding, a check from the customer 365 for a debt was outstanding. Now, if the amount is outstanding, what we can do in the cash book at the year end, that is received in April. So it's not something I made a mistake in the cash book, and without receiving it, we cannot actually record on the cash book. So if a check actually received on the bank, if a check I received and I record in my book, if I give to the bank, if even the bank didn't clear it yet, I cannot do anything. So that will go to the reconciliation. If something that I received, and obviously I have to record immediately. If I give a check to a supplier, I record immediately. It's not something I delay. Doesn't matter the check is cleared or not. As soon as I received it, my cash book is always up to date. So if a check from a customer for a debt outstanding at the year end was received 4th of April, so that means my cash book is up to date, because anytime I receive something from the customer, or if I paid anything to the supplier, I record immediately. It doesn't matter the bank paid it or bank cleared it or not. All right, so let's move on. The next question we have here said, which of the following statement about the net pay control account is true? Net pay. Net pay is the money that we actually pay to the employee, isn't it? So net pay is the pay. So from the gross pay, let's say the gross pay is £100, and from the gross pay we minus the tax, let's say 10, we minus the national insurance, let's say 10. Whatever is the difference is 80 after deducting tax, national insurance, and even the pension. Whatever is the remaining, this is called net pay. And the net pay is the amount that actually received by the employee. Net pay is the amount that is received by the employee. So they said, which of the following statement about the net pay control account is true? Remember, net pay control account balance always have to be zero. There'll be no balance CD or BD, because whatever money we have, the net pay, this one we pay to employee. We have to pay to employee. We cannot say like, okay, the net pay is £100 and we pay to employee £80, £20 will pay you next month. No, we cannot do it. Whatever is the next pay, whatever is the net pay amount, the absolute figure, the correct amount, we have to pay to our employee immediately for that. So, for example, the tax amount, the NIC amount, that can have a balance CD or BD because we can pay later on. But the net pay, we cannot have a balance. We have to pay the employee all this amount. So we can say this one, if there is a net pay, we can say should have a balance of zero when all relevant entries have been correctly made. So should have a balance of zero. We cannot have a balance. We cannot say we didn't pay all the money to the employee. You have to pay. All right. So yes, Vinol is kind of the same thing. So net pay control account and the wages control account is kind of the same thing, because we make a different control account to see what is the balance. For the net pay, there will be always zero balance. Okay, so let's have a look of our next point here. So we have, you are working on the accounting records on different business. You have the following extended trial balance. The adjustment have already correctly entered. So that means the adjustment is already done. All you need to do, we need to complete the extended trial balance. Okay, let's do that. Hopefully you can see all of this at the same page. So let's see if we can make it a bit smaller so that you can see it everything at the same page. Okay, let's do this one together. All you need to do, we need to say how much is the amount and where it is going. So we need to say, for example, the bank, how much will be the bank total after the adjustment, and where it shall go. It shall go to the profit and loss account, or it shall go to the statement of financial position, or if it is going to the debit side or on the credit side. So let's do it together. The first one, we have the bank. First one, we have the bank. So we can see on the ledger account, the bank balance, we have a credit. We have a credit of 958, and on the adjustment we make another credit. That means this is not my asset, that's my liability, isn't it? So we have both credit, that is my liability. Now what type of liability it is? It is a current liability. And if it is a current liability, it will go to where? Profit and loss account or statement of financial position. You can say SPL or SOFP. So it's the same thing. So the bank will go to SOFP as overdraft as a credit. So we can say bank SOFP credit. So we can say bank SOFP on the credit. And how much it will be? The total. Remember, one credit and another credit is like a plus. Credit and credit like a plus. Credit and debit like a plus and minus. Debit and debit like a plus. So 1033, thank you, Bletra. So 1033, that will be our credit, and that's relevant to statement of financial position, the bank. The next one is capital. I'm sure all of you know that. Capital is very straightforward. Capital goes to the statement of financial position as the credit side. So capital 11,000, that is our credit. The next one, closing inventory. On the adjustment, you can see we have a two figure, debit and credit, because closing inventory go to two places. Closing inventory go to two places. It goes to the credit side of the SPL because we minus it from the cost of sales. If you remember the template, opening inventory, last purchase, less closing inventory. So we minus it on the statement of profit and loss account. So that means it's a credit here. So 9930. And on the financial statement, that is also our asset. So we say this is a closing inventory, this is also asset. So this is our debit. So 9930. It at some task I've seen the closing inventory is going just SOFP or just SPL, not both. Okay, so basically what happened if we have a closing inventory, let's say we have just inventory, the quotient didn't say anything, just inventory, so we understand is the closing inventory. Now the closing inventory, how it is work. So on the SOFP statement under the current asset section, we have few current assets. We have a bank, we have a trade receivables, and we have inventories. And this inventory is the closing inventories. And on the other hand, when you prepare our SPL account, the statement of profit and loss account, here we do sales, and from the sales we minus cost of sales, COS. So this cost of sales, we have some workings for the cost of sales. So on the cost of sales, we said opening inventory plus purchase less closing inventory. And this one give us cost of sales. And this cost of sales come here and we find the gross profit. So obviously, if the quotient already give you cost of sales, then you really don't have to calculate this one again because closing inventory for the SPL, the cost of sales have this figure inside. So really you don't have to do it. But for the financial statement, you have to take it as a current asset always. So closing inventory, you have to take to the statement of financial position as a current asset always. So maybe for the statement of profit and loss account, if they give you cost of sales, you don't have to take it separately because the closing inventory inside of the cost of sales. All right. All right. So let's talk about the next one we have depreciation. Depreciation 3895, where it will go. The depreciation is an expense. Remember that depreciation is a non-cash expense, and that is always relevant to a statement of profit and loss account. So depreciation is always relevant to profit and loss account. So we have two things. One is depreciation, one is accumulated depreciation. Depreciation is for only for 1 year. So that is relevant to profit and loss account. On the other hand, the accumulated depreciation, that is basically go to the statement of financial position because that is reducing the value of the non-current asset. That will reduce the value of the non-current asset. So it's the depreciation 3895, that will be debit on the profit and loss account. 3895. The next one we have equipment cost. So equipment cost on the ledger balance we have a debit, on the adjustment we have a credit. So debit and credit like a plus and minus, isn't it? So we have to minus it. So 20,162 minus 689, that gives us 19,473, and that will be the debit on SOFP. Very well done, Amit. So we'll take it 19,473. Let's go to the statement of financial position. Very good. Let's move to the next one. Accumulated depreciation 15,579. Accumulated depreciation is straight away to the credit side of the SOFP. So that always the liability, it will go to our SOP account as a credit. 15,579. The next one we have interest paid is expense. So both are debit. You can see it 63 plus 75. Both are debit. So 63 plus 75, that gives us 138. Thank you, Amit. And that will be the debit on the SPL account. Yes. On our statement of financial position, we only consider asset and liability, asset and liability and capital. These three things only come to statement of financial position. On the other hand, statement of profit and loss account, we consider expense and the income. Okay, loan. So we have a loan credit and debit. So adjustment, we have a debit. So loan is credit 6566, and we have a debit that is 1085. So that means debit and credit has to be plus and minus. So how much will be the loan? 5481. Very well done, Freight. And that will go to where? That will go to SOFP as a liability, as a credit. So 5481. 5481. Very good. Then we have office expenses. Office expenses, we can see the opening balance, we have a debit, then we have a debit, then we have a credit. So we're going to do opening plus 689 minus 290, isn't it? That will give us 22894. That will be the debit for SPL. Very well done. That will be the 22,894. That will be the debit. Let me write it again. So 22,894. 22,894. All right, then opening inventory. Opening inventory is very straightforward. That will go to debit side on the SPL. Opening inventory, debit side on the SPL, 10,058. Payroll expense is a wages expense. That's also relevant to SPL account. Debit is expense, 2825. Then prepayment. Prepayment is an asset. Prepayment is the asset. So you paid in advance. So prepayment, we have 290. Prepayment is 290. Prepayment, remember that prepayment always your asset. And this is your statement of financial position item on the debit side. So 290. Then you have purchase. Purchase is also expense, and that is relevant to profit and loss account. So purchase on the debit, 79454. 79454. This is our statement of profit and loss account on the debit side. Then purchase ledger control account. This is our trade payables. This is our trade payable. It's a liability account. So that will go straight away to our SOFP account 13167. Then we have a sales. Sales is income. Sales is always a credit, is income. And we can see we have another credit. So that will be definitely added. So sales, we have 126,139 plus 485. So the total sales will be 126624. Very well done, Umit. So 126624. This is my income. And after that, we have, let me write it down clearly, 126624. All right, the sales ledger control is asset, trade receivables, credit customer, isn't it? Sales ledger control means that credit customer, they're my asset. So they'll go to statement of financial position. So 16,979. Suspense, we never take suspense. Suspense has to be vanished. Suspense we never consider. Don't take any suspense balance. Then you have a VAT. VAT is a liability account. So VAT will be our credit, the statement of financial position. 1122. And once you have all of this figure, all you need to do, we need to now add it our credit side of the statement of profit and loss accounts, we'll add all of these two. We have only two. We have a closing inventory and we have a sales. So, okay, and yeah, can we add these two to find it out? Is it the profit or loss? All you need to identify. If my credit side is higher than the debit side, then it will be a profit. If my debit side is higher than the credit side, then it will be a loss. So you need to identify which side is higher. So add the debit side as well. So debit side looks higher, 137 to 64. Okay, that looks higher. So I'm going to write this one. So 137 to 64, 137 to 64. Because my debit side is higher, so I'm making a loss. I'm going to say a loss. How much? 710. All right, so 710. The shortest side. Credit side is the short of 710. That means we are making a loss 710. If my credit side is higher, so you're writing the profit, then the profit will come to the debit side. All right, so this 710 have to move as a debit side on the statement of financial position. So remember, if there is a profit, let's go to the credit side of the statement of financial position, because if there is a profit, my capital will be increased. If you remember the template of the capital, opening capital plus profit less drawings, this gives us the closing capital. But this one, we have a loss. That means it will be on the debit side. That will reduce our capital. So after that, all you need to do, you need to add it the both side, the statement of financial position, the debit and the credit, and it has to be equal. It has to be match. The debit side and the credit side has to be equal. So can we check that? The debit and the credit. So 9930, 19473, 290, 16, 979, and 710. So that will give us the total. And on the other hand, we have 1033, 11,000, 15579, 5481, 13, 167, and 1122. So if we added both sides, it should give us the same amount. So if it is the same amount, then we understand this match and our financial statement is completed. So we said 47,382. Thank you, Zompa. So 47,382. So all of the things we have to do it correctly, and we'll understand as soon as our financial statement is matched, the debit side and the credit side, we understand our all the adjustment, all these workings and all this calculation was right, because the asset and the liability has to be matched always. So this question will be in the exam definitely. So extended trial balance question for the 20 marks always there. There will be little bit adjustment like for the doubtful debt adjustment, and you have to do some practice for your doubtful debt adjustment. This is the only thing sometimes student is stuck in the exam, the doubtful debt adjustment. So make sure you spend some time there for the doubtful debt. Otherwise, this exam will be not very difficult. So you will have a non-current asset question, that is very important. You'll have a question from the accruals and prepayment. This is very important. The depreciation will not be difficult because the depreciation is very straightforward. Rent receivables is an asset. Rent receivables, yes. So you're going to receive some rent. That will be your asset here. So if you obviously like if you have this thing on your exam, make sure like you know what to do. So the non-current asset, normally the question will come and that will ask you like they'll give you some cost of the asset and they'll tell you what type of cost you're going to take. So you need to know like the cost of any part of the machinery or any part of this. Obviously like you have to take as a part of the cost any direct labor conversion. So if you use the direct labor and that need to make the machine usable, that will be the part of cost. Then anything that is delivery cost, that will be the part of cost. But any cost that is not directly allocated to the cost, you don't capitalize it. For example, the insurance cost, for example, the maintenance cost, this type of cost is not part of the cost. But sometimes they will give it to you in the exam to make you confused, but make sure you don't take it. The next thing for the depreciation, you know straight line and the diminishing value both. So all you need to do, you need to calculate the depreciation. And after that, obviously, the next question you're going to see that from the adjustment. And the accruals and prepayment, you have to make sure you have a very good understanding of the accruals and prepayment. And if you need, you can watch the video once again. The link I have sent it to you from the YouTube. So that video will help you. The video I have uploaded for all of you. So you can again watch that for your accruals and prepayment. And obviously, like if you have like any type of other concern, you can always email me. Of course, like I'll try to get back to you on the convenient time. And the next question we'll expect, that could be from your reconciliation, that could be from the bank reconciliation or from the control account reconciliation. So this question will come like they'll give you some adjustment. They'll tell you like, is it going up or down? So you need to do that the way we did for the cash book. You can do for other sales ledger control, like for purchase ledger control, for the bank statement as well. And finally, the last question you're going to see from the extended trial balance. The extended trial balance kind of the question is always in the exam for 20 to 25 marks. So you need to be very careful on that question. So as I said, like most of the question, they always stop on that area for the allowance for the doubtful debt. So make a note for the allowance for doubtful debt. Make yourself very clear how the doubtful debt allowance work, because this question will be definitely in the exam, and obviously it will be very, very helpful for all of you if you can read this very well and make yourself ready. And obviously, like as I said, next week we're going to start the module final account preparation. And if you already have your book, is fine. Otherwise, make sure you order your book, because it's better to have your book. And during your Christmas break, you can still do the exam. So if you feel you are ready, you can book any exam. You can speak to the admin team, or you can let me know if you are ready. So maybe we can set up the exam. So there is no problem for that. And of course, like the next week, we're going to start our new paper. That will be final account preparation. So make sure you have your book with you ready. And yes, after next week, Asim will have a 2 weeks break. Vinal, I will have a look at your question, the question you have emailed. I will have a look for your question. Yes, I think so. Like after the next week, we'll have a 2 weeks break, I think. Yeah. So yeah, 24 and 31st. Yeah. So the next weeks after next week, the 2 weeks will be no class. Yes, Esther, I said like from the next week, we're going to start the new paper that will be final account preparation. So if you already have your book, is fine. Otherwise, please order your book. And afraid you said on the test my knowledge, we received a bill electricity. Can you email me, Fred, this question, please? I'll have a look and I'll get back to you. If you have any question, please email me. I'll better to, because if you have individual question, it's better like you email me. I'll get back to you individually. All right. So any more question from any of you? If you have any question, you can ask me now, or you can send me the email. So obviously, as I said, I have sent some practice question to all of you. I hope all of you received it, and do some practice as much as possible. And the exam will not be very difficult if you are ready, but it's not going to be that easy. The way you do here practice is going to be a little bit tricky. So you have to use your critical knowledge. So they will give you the question. So you have to do some critical analysis before you can answer that. All right. So hopefully, like I'll see you next week, and uh, I'll see you next week same time. Yes, Blacktor, that will be good. Just send me the email. I'll reply to you. So I'll see you next week same time with the new paper that will be final account preparation. Till then, stay safe, and I'll see you next week same time. And thank you very much for your time today. Thank you very much for joining with me. I'll see you definitely next week same times with the new paper. And during this time, do some revision, do some practice, and let me know if you need any help from me.